Next week's market could be a little bit crazy. We need to talk about it. I am Dr. Stock, Doctor of Education, and a chicken coop has 2 doors, but if you give it 4 doors, then it's a chicken sedan. Nearly every day of next week, we have something coming up that can seriously disrupt the markets from where they're at. And I think there's going to be a lot of volatility that goes along with it. And I'm going to detail each of those. And I'm also going to tell you later on in this video how to get up to 16 free stocks using my link down in the description, and also about my Patreon. But for right now, I really want to get over to the calendar of events and provide some commentary and talk about what I think the market implications are going to be. So here we go on trading economics. When we're looking at this, we have consumer inflation expectations that right now that forecast is coming in at 3.4% and the previous was 3.5%. So anything below 3.5 is going to be upward pressure on the markets. That can be a good thing for us. Anything above that 3.5 or staying steady at 3.5 is going to be neutral to downward pressure on the markets. So we really want to pay attention to that. That's Monday at 11 a.m. is when we can expect to see that take place. So that's what we have there. And then we move on to Tuesday. A little bit of news on Tuesday when we come out with business optimism index, 91.9. We'll see if that changes up or down. And then this next one is Redbook, which is same stores inflation, 4.1%. Will we come in at a lower number than that? We're going to have to see. We have had some rises recently, followed by a little bit of falling off. So we'll see if we get those Redbook numbers that end up putting us a little bit below that value. Let's move on to Wednesday, where we get the CPI report. Now, this is one that I think can actually go back and affect Monday and Tuesday as well, leading up to that, really setting us up for that. And really the pre-market hours are what we're going to watch on Wednesday, leading up to that 8:30 hour, where we see what exactly is happening with that. Now, about this, we have a consensus on here. Inflation rate 0.6. Holy cow, that's even up higher than it was before, is the consensus. Trading Economics has it at 0.4. Core inflation rate at about 0.2. So food and energy really pumping up those numbers that we can expect for next month. And then the previous you can see was at 0.2 either way. So this has already been priced into the markets. So if we get that print, it's something that I don't think is going to move with the market too much. If we go higher than that, I think that's going to seriously put pressure, downward pressure on the markets. A lot lower than that is going to be upward pressure for the markets. And then with the inflation rates, 3.6%. Year over year is what we're looking at, 4.3% year over year for the core inflation, where we're at 4.7 before for that core number. So coming down below those, again, upward pressure. Keep watching those, and we really want to see what they print out as PPI looking forward from there. And with energy prices going the way they are, it could be something that we get higher prints. Possibly you can see the consensus coming in at 0.4, and then we go down to core PPI month over month, where we drop back down to 0.2. So we'll see. We don't want to go back the other way with inflation and give the Fed further reason to tighten. We can always go back and look and see what the Fed is planning to do, or what the bond market thinks the Fed will do as a result. And when we get more of a likelihood for rate hikes, that's going to be downward pressure for the markets. And when we get less likelihood of further rate hikes, that's upward pressure for the markets. So let's move on from there to Friday. And Friday is actually a big day. Not only do we get mission consumer sentiment, as well as some other things like New York Empire State Manufacturing Index, we want to see a sharp increase in the consumer sentiment that we have, and inflation expectations. We would like to see that either stay steady or decline. But the bigger thing about that day is that we actually have the quadruple witching coming up, which let me show you what that is quick, because I know there's a lot of questions on that one. And this is a big expiration date for options that affect the market. So we have index futures, stock futures, index options, and stock options. All of those expire simultaneously, same day. And so that whole week can be thrown off just by the quadruple witching itself, but put everything on top of it. And I think that we get a really whippy market, whether it's to the upside or the downside. And so with that said, I do want to switch over to Moomoo. So what I have brought up for you here is the SPY, and we are closing pretty much close to that 50-day. We'll see where the markets do close at the end of the day. Should we close up near that? And I do think that we will. So it is possible that we see further upside from where it's at right now, but I do think that we stay close to that. And I don't think that that's coincidental. I think that's setting us up for being on that little bit of a seesaw for next week. And the fact that we're near that for right now resistance, because we're coming at it from the bottom side, I think that it could be something easily broken by really positive news, or that we could fall very quickly from should we get strong negative news. And so just from the volatility that I expect for next week, I think that we could actually move from where it's at right now about 2% in either direction Now, if we get something strongly negative for inflation, we really start to put the nail in the coffin for further Fed rate hikes, that is something that, or I should say guaranteeing further Fed rate hikes, that could really push us down through that 2% level. And maybe we drop down to maybe that 430 to 433 level in the SPY. If we get really good inflation news that inflation is cooling faster than expected, that's that positive pressure that I think puts us up. And that if we really get good in consumer expectations, consumer sentiment on inflation, good inflation news, then, the race is on, rally on. We overtake this last high that we had, and I think that we start pushing on to the last previous high prior to that one. So we'll see if the sky's the limit on that as those reports come out, but I do expect 2% in either direction. And when we go over to the Qs from there, this again, I have that 2% in either direction, which lands us in some pretty critical areas for support and resistance. So once again, check it out. We're just above that 50-day, but we are hanging around pretty near it, kind of ending in a safe, kind of uncertain space, allowing for that seesaw effect to happen next week. Whether we go up or down, it depends on the sort of news that we do get. If you want to go back and watch my CPI inflation video, I do have that up for you. So for those free stocks, you can find my link down in the description. All you got to do is sign up using that link and make your deposit of $100 or more to get the free stocks. $100 deposit, 5 free stocks. $1,000 or $5,000 gets you 15 free stocks. The $5,000 deposit level also gets you a free share of Tesla or Google. More than that, over at the Patreon, if you want to see how I'm playing the volatility for next week, I have my options trades over there posted already, my buys and sells that I do. You can see how I'm taking advantage of these markets. That is there for you. And also my portfolios amplified options course is also being built out right now. If you want to start from the very beginner level, go all the way up through advanced trading strategies, I am in the process of building that. That is available over at the Patreon. You can find that as soon as you are ready. So let me wrap this up, my friends. I think that we move 2% in either direction. That is a very good likelihood, and we could possibly get strong enough news that we either blast off to the moon, we break that 2% to the upside, or that we get some not so great news and we end up falling through the floor for a while to the downside of this thing. We're going to really have to watch and see. Next week, I think, is super important, plus the quadruple witching on top of it. And I am set up for those volatility plays. And if you guys want to see how I'm doing that, come on over and check it out over at the Patreon. That link is down in the description. And also amplify your portfolio using that options course that I'm building out. And I'm going to add more videos to it this weekend. I'm excited about it, and I can't wait to have this thing fully fleshed out and really see how people are using it to capitalize in their own portfolios. Don't forget about those free stocks from Moomoo using that link down in the description. Thank you guys for watching this video. I really do appreciate it. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you in the next video.